Hello everyone. On April, when the market sold off due to a tariff, I saw this claim from Tom Lee on CNBC. He was saying that every time that the VIX closes below 30, and in the previous 30 days it was about 60, we get this V-shaped recovery. Really simple to test. This is an opportunity that happened since 2020, 3 times only. This is not frequent, but every time that we see it, it seems that it's profitable. Now, as a disclaimer, past performance doesn't guarantee that it's going to be good in the future, but the back test is really, really good. All right, so this is the strategy that I created for ThinkOrSwim. I'm going to put this in my Substack. You can go subscribe there, and you want to see this one and everything that I'm going to be adding in the future. How this works. The entry is every time that the VIX closes below 30, and in the previous 30 day it was above 60, I'm gonna buy, and I'm gonna sell when we get a new high. That's it. I'm not trailing the moving average. This is very simple. It's just for the sake of the backtest, the claim. And also I'm not using a stop loss. That is highly recommended. Yeah, it's very simple, and these are the results. You can see it here. If you go to QQQ, you can see it also too in QQQ. Now, I'm going to be putting this strategy, the VIX, on Substack, and you can see it. As a variable, I put the threshold for the VIX. If I want to enter based on 60, 30, 50, whatever it is. I'm going to be adding another code because to make it a little bit more professional, let's say, or sophisticated, whatever. This is a code that I wrote in QuantConnect. If you want to have an algo running, and if you already have a strategy trading the indexes, for example, you can add this one. Whenever it happens, it's gonna buy for you. Now, this is in C#. For QuantConnect, I prefer C# because the base code, they wrote it in that language and the performance is better. Now, the code is very simple. I'm gonna put that also in Substack, so you can go there, get it, and run it in QuantConnect. As a parameter, how I said, I have the threshold for the big stop. I run an optimization for this parameter. For default is 55, minimum 30, and maximum 70. The results are here. If you go to the optimization, you wanna see all these equities curve. And let's say if you order by Sharpe ratio, I got the same result for 55, 50, 45. If I go in detail, this is gonna be the equity curve, and there are more details. You can see the drawdowns and also the entries and exit from the strategy. Okay, now this is if you select by Sharpe ratio, the drawdown here is 9.3. Now, if you go to profits, there is one that has more profit, but the drawdown is also worse, and is relaxing the threshold all the way to 30. If I select it here, you're gonna see all this drawdown in the bad time, but then you're gonna have all these entries. How I said again, I'm not trailing the moving average. I don't have a stop loss. This was only to backtest the claim. Maybe if you want to make a better strategy, you can cut your losses quickly and let your winners run as long as they are moving, and probably the strategy is gonna be better. But again, this is only to prove the claim, and as a disclaimer again, this is no guarantee that it's gonna work in the future, but for sure it's gonna stay on my radar. In my Substack, you can subscribe. You're gonna see the strategy for ThinkOrSwim, but also for QuantConnect.